right, Metropole TVKE across all your social media platforms. This is your economic review this morning. Welcome to the broadcast. My name is Simba Elijah Charles Kiaga. Let me take this time to introduce the gentlemen who are joining us this morning for this conversation. We do have Collins Lodge, who's a lawyer and economic analyst. Collins, good morning, sir.
Good morning, how are you?
Happy to see you. All right, we do have Rufus Kamau as well, who's a research and a market analyst at Scope Markets. Rufus, good morning, sir.
How are you, Simba?
Fantastic. I can't complain. Only Collins knows why I would complain this morning. But anyway, let's put it to the side and get into the first issue that we have this morning. But the latest data by the Central Bank of Kenya indicates that the shilling is recording a 5-month low against the US dollar as it fights a growth in imports, which increased the demand for the greenback and cash inflows from exports. Metropole TV Harvest data had the shilling quoted at an average of 109 shillings and 80 cents the week ending 27th of August, this being the weakest level since late March when it recorded between 109 and 75 cents and 109 and 85 cents. Now this drop has been attributed to the mismatch in supply and demand, with a heavy dollar demand coming in from importers. Let's look at that trend that we're talking about this morning in terms of the Kenyan shilling exchange rate against the US dollar, and you can see that as from around 13th or 11th of August 2021, it was a high rise, which we are talking about from an average of around 108 and 60 cents, and now we're recording around 109 and 80 cents against the US dollar. Let's look at that trade balance again, and we do have it all the way to June 2021, and that's what we're talking about. It's on a negative, and you're looking at that in terms of balance, and has been since January, but it looks as if we are not correcting it that much, and the majority of analysts are saying that this is as a result of the import bill, which is being made worse by just one area: oil. Let's talk about that this morning. Let me introduce Rufus to the conversation. Rufus, let's talk about that trend. I mean, when you're looking at the shilling behaving like that, the question that somebody's going to ask you this morning is a fresh week of trading that we're starting. Do you expect it to touch the 110 shillings level against the US dollar?
I think it was pretty much expected considering the current situation. If you look at the rest of the world,
yes,
reopening the economies, if you look at stadiums in the UK, the US, they are full, their economies are fully operational, so they are producing at full capacity. If you compare this with Kenya, we are still undergoing COVID-19 regulations that are limiting business, and this is in turn affecting the demand for the Kenya shilling.
Yes.
So if you look at the net imports, the costs are really going up, considering the recent case of containers. So if you're importing any kind of container in Kenya, prices have already doubled in the last couple of months. It has made things really expensive. At the same time, if you look at the exports, they are really doing well because of the exchange rate. But since we are net importers as a country, then the Kenya shilling is about to be affected. One other factor to consider is the issue of tourism. We know that a lot of countries have banned Kenya, has put Kenya under the red zone, and this has limited the number of tourists to our country. So the money that we used to get at this part of the year is no longer flowing in, and this is having a big toll on the Kenya shilling.
Yes.
So I think it's high time we take on the vaccinations at a faster rate and hurry up and reopen our economy, lest we are left behind and our Kenya shilling keeps getting weaker.
All right, Rufus, just before I bring in Collins to the conversation, I mean, there's some data that when you look at it, then it sort of starts to paint the picture of what is really even making the shilling not go to the 110 level against the US dollar, because on that, we did have the World Bank, yeah, from the International Monetary Fund that were expected to give us around 45 billion shillings, which they did, and the World Bank gave us 82 billion again, which they did. I mean, you would like to look at this data and then say that the only source of pumping dollars into the Kenyan economy was just this loans that we got from IMF and the World Bank as well. Does that show the gravity of the situation, the pressure that the shilling is under right now?
Yes, absolutely, absolutely. So if you look at the amount of money we are getting in terms of loans,
yes,
this is coming in terms of US dollars.
Yes,
it's keeping on adding to the pressure that we are already having as a country. So every time we get one more loan, every time we get one more donation, it's basically pumping even more money into the economy, which is creating the inflation. So it's not a unique thing to our country, it's also happening to other economies. So if you look at the US dollar, the inflation is also flying through the roof. If you look at other economies surrounding us, if you look at the Ugandan shilling, the Nigerian naira, they're also experiencing high inflation. So it's quite expected globally that we accept and try and deal with the high inflation, while at the same time trying to support our businesses so that they don't close down. So I think the most important goal right now is to support businesses, support people, make sure that they remain in their jobs, and then once we are through the pandemic, we can find and now look at addressing the inflation.
pretty much. All right, Collins, I mean, when we're talking about the Kenyan shilling again, or when we look at the net importers of the dollar into the country, we have to speak about tourism, Collins, and it has been heavily affected. I mean, we're talking about this 109 or 108 levels because we do know very well that tourism has been heavily affected. But what we do know again is the US has us on their red list. The UK also has us on their red list, and this is what we expect a lot of visitors to come in and sort of try to take the pressure off the Kenyan shilling. Collins, with the way things are going, does it look a bit bleak for the Kenyan shilling to the point that we're saying, well, if things don't change, especially on the tourism front, and then the oil bill keeps on increasing the way it is, then maybe we should get ready for 110 plus levels of the Kenyan shilling sooner rather than later.
One, I want to agree with what Rufus has said.
Yes.
Two, I foresee a gradual decrease in our performance as the Kenyan shilling. And the bigger picture of this is COVID, really. When you look at March 2020, when we reported the first case, we were at 102. Now you see we are now at 109. So I really foresee us getting into 110. And those are many factors, but majorly because of the stagnant tourism sector that we have.
Yes.
But you literally need to look at people hoarding a lot of dollars. Yeah, people are buying dollars and hoarding dollars because of the uncertainty that we have with COVID. You see many times we talk about a new variant. We're even looking at a new trade coming, I think, in 2022. Possible things like those, and the kind of charm offensive that we've been doing as a country in trying to win back these other countries that have had us in red list has not worked.
Yes.
For instance, you remember when we had COVID, the president sent out flowers to the UK. The president the other day was out in the UK launching the Global Education Summit there. But yet, even with all this charm offensive and the kind of camaraderie that we have with those countries are not paying off because they still have us on the red list. Look at the kind of measures that the government is putting in place to, for instance, revamp the tourism sector. Look at even the liquor industry. There have been a lot of containment measures geared towards those sectors. If the government is giving reliefs, they are not geared towards the tourism sector. So I think the government is really thinking of tourism as a basket or a market stream for us as a country, and that's why we will still keep having this stagnant tourism sector for us, and it will keep affecting us. But more from that, I think even the decline in the inflows in export, the kind of inflows we're getting from our exports, reduced the rising cost of imports for raw materials, the reduced diaspora implementers are going to play active. But one thing you have to realize is that, for instance, as we're talking about the reduced remittance in the diaspora, we have for the first time the foreign deposits from our country, from Kenyans, has increased because the wealthy Kenyans are putting their money abroad instead of investing in other alternative ways to see how we can revamp the economy. These are
Yes.
things that are really playing a factor into the kind of decline you are seeing in the performance of the Kenyan shilling.
Pretty much. All right, Rufus, let's talk about exactly the point that Collins is alluding to, that diaspora remittances. We do know they have been good since 2020 up to now. In fact, if you look at exactly how they've generally remained strong through the pandemic, they've grown 19.86% in January to June, recording 192.15 billion. Would you say that they've had some little impact on the stability of the Kenyan shilling against the US dollar?
I would say there has been a structural shift.
Yes.
Investors are trying to rebalance their investments. So on one side, we export a lot of labor to the rest of the world.
Yes.
And these exports, if you're working somewhere abroad, then you feel very confident sending your money back to Kenya because the exchange rate is really good for you. So if you have your dollars and you're converting to shillings at 110, it's working very well for you. However, for people who are currently in Kenya and they're holding the investments here, then it's very attractive right now to invest outside there.
Yes.
Because if you keep on holding on to your investments in form of Kenya shilling, and the Kenya shilling is weakening, then you are losing on the longer run. So there's been a demand for foreign investments, and this demand is can be witnessed in several investment classes. So we have seen a spike in trading of offshore shares. At the same time, we have seen a recent article saying that the P2P transactions for Kenyans in the cryptocurrency sector are rising, actually top in the world. And this is a big indicator that Kenyans are tired of investing in an area where the currency keeps on losing against the dollar. So we are looking for assets that are performing much better. And this might be a reaction. And the government, and especially the central bank, should take note of these and try to promote a healthier economy so that local assets can perform better.
Pretty much. Well, first, let's end that conversation with the last question that I have for you this morning. Especially, you've touched on the central bank. Now, if you look at the way in which they have been acting, I mean, we've seen them go into the repos market sometimes when the Kenyan shilling is really performing poorly against the US dollar, taking some dollars off the Kenyan market just to try and stabilize it. But let's look at it. I mean, the reserves are fallen $432 million. That's around 47.43 billion, or 4.49% from a recent high of 1.05 trillion in the economy. So when you look at that again, it looks as if the Central Bank of Kenya is also watching, because if you look at those reserves as well, which can actually dig in to correct the situation, it's as if the only thing they're saying, let it not go above 110. Is that what it is? Because also, if you look at the reserves, they're also sort of falling, so they can't just dig into them just yet.
So it's quite a complex situation, and I would commend the Central Bank of Kenya for what it's doing right now.
Yes.
So we know there's the scenario of COVID-19, and this pandemic has really affected the economy. But the stand by the central bank to lower interest rates to 7% has really been on our side, has really supported us as a people and also as a country.
Yes.
So usually whenever the inflation rate is going up, the Kenyan shilling is rising, the normal tools that the central bank would use would be raising interest rates, and these would have a negative on the economy. So in this case, by maintaining the interest rates low at 7%, they are really trying to support the economy. The problem, I believe, is happening at the commercial banks level. Once commercial banks get giving this money to the people so that people can invest in their business, they are basically reinvesting the money back to the government. So by competing for locally available credit, that is between the government and the people, this is where we are getting the real challenge.
Yes.
So if you can get a way to incentivize these commercial banks to push more money to the people, then in this case, you see the low interest rates working and supporting the common mwananchi.
Fantastic. All right, Collins, let's move on to the next one this morning. Now, let me just make this a short introduction. This week, we do expect that freshmen are going to go into Nairobi University or University of Nairobi to begin their studies, Collins. But now, Collins, listen, if you're expecting to pay the 48,000 or the 16,000 tuition fee as a JAB sponsored student, no, you're going to pay upwards of 59,000. If you are a medical student, especially if you're going in for your master's degree, you're going to pay 3.43 million over the 5 years. Now, parallel courses in commerce, economics, and law have been increased by up to 70%. So right now, if you're going to study in those parallel courses, then you need to have 1 million ready for the next 4 years. Now let's talk about that. Now this is the university that is counting on this move to turn around the misfortunes they found themselves in, because indeed they did not have the numbers enough for them to support some of the courses that they had, and also as well support the payment of some of the lecturers at the university. Now, Nairobi University itself is going to up to 1.4 billion loss for the year ending June 2018, and the fears that this number might be worse as we are talking about in 2021, because they have been the leading universities in terms of those that have defaulted on payment of even statutory payments like NHIF and payee as well. Let's look at that quickly. The numbers that we're talking about this morning, enrollment numbers you're going to see to university has been dropping and dropped further again in 2021, 2022. Expenditure and public universities, again, if you jump onto that, you've seen that where it has been is on recurrent expenditure. That's why majority of these universities are getting the money on. If you look at that budget, then it has dropped again in 2021 and dropped even further in 2021, 2022, with Mahoga telling them you need to be creative in getting the monies to run your universities. Collins, the way to go or to hush?
One, I agree with what Professor Mago has said. They need to think of creative ways of getting money. Two, I've always subscribed to this theory that finances should follow functions or should follow results. That you are increasing fees and we are not seeing results as to why, or justification as to why you're increasing fees, save for trying to sort the dilemma that you have, the cash crunch that you have. And the issue of UN is very dicey, because we've seen on air the Vice Chancellor, together with other leaders from the university, having differing opinions as to these measures that they had to reduce, for instance, number of units from 579 all the way to 300 or something. They had to remove functions from the offices and all these things aimed at that. And then finally, they decided to increase the fees. But let me ask you, for instance, and just to think about the other ways that a university can raise finances. For instance, we've had the COVID pandemic with us. How has the Ministry of Health reacted to the COVID pandemic insofar as looking for data on how they can cushion themselves and the country and how to get policies that can work for it? They've resulted to having exchange programs. They've resulted to conducting meetings in posh hotels. They've resulted to asking other countries how they've done it. We've not had educational data or educational information. For instance, let's say University of Nairobi transforming itself to be a research center. The only prestige of University of Nairobi is being there for long. Other than that, there is nothing that they can hold on to. For instance, we cannot say, look at these papers that have been published from University of Nairobi, telling the country on how to progress insofar as combating the COVID pandemic is concerned. Have you seen the University of Nairobi, for instance, in advising Ministry of Finance, for instance, on how to deal with the issue of public wage bill, the issue of the debt, and all those issues? We've not seen that, because we've not transformed our universities to be centers of research, something like that, or to even sell the knowledge that we have to be a hub where people can go and seek solutions. We've not seen that. But what I'm saying in a nutshell is that you're not going to increase the fees and still maintain the status quo. That is something that I don't think people are going to agree. And you saw parents up in arms. We are coming from a COVID pandemic, and now you're increasing the fees. For instance, when I joined law school back in 2013, when you would compare the fees across the board, Kenyatta University was the one that was charging less. You were paying something close to 570,000 from in Kenyatta University. In Strathmore, you would pay 1.4 million. In Riara, where I went, you'd pay 1.2 million the whole time you do your degree. Now, when you look at the numbers across the board, then University of Nairobi would charge 600,000. Now, when you look at the numbers across the board, you get University of Nairobi charging 1.1, you get Riara 1.4, you get all these universities have moved higher. But go and interrogate whether the quality of education in those places has improved. You'll have the debate always, are we churning half-baked graduates? Are we churning graduates that cannot fit the job market? Are we having courses that people are studying for archaeology, for instance? Where are those people fitting? It's a whole conversation altogether on radicalization of the education sector. But what the University of Nairobi is doing in a bid to try and see how they're going to ease in their cash cuts that they're facing, I don't think it's welcome. I think they need to exploit other mechanisms of doing so without burdening the parents and the taxpayers.
Yes. Collins, quickly, just before I jump to Rufus, before we take a short break, but they have done that. You saw they scrapped some offices in the university in a bid just to reduce the expenditure. They've closed a lot of their settled campuses in the country. In fact, that means effectively scrapping off some courses, Collins, from their offering. Is that not the way to go then? But again, Collins, is it not too fast from the Ministry of Education and Magoha saying, okay, now you gotta be creative, we don't have money to give you? Should have it been a gradual process as opposed to telling them, well, there's no money, so you gotta do what you gotta do?
One, as you're saying, it should not be a knee-jerk reaction. That it should be a gradual thing. That we should be having these conversations on trying to see how you as a university can turn around the faith that you're having.
Yes.
Look at the detriment that the students have faced. That for 4 years you sat in a class, and then after 4 years you're being told your degree is obsolete. Like there's nowhere you can go with that degree.
Yes.
That after 3 years you're being told the university is reinventing itself, and so we've realized that there's no way we're going with these courses, and so we are scrapping them out. What is the fate of these students who've signed up for these courses and paid fees for 4 years? What is their fate? I mean, I don't think the university was concerned with looking at the welfare of the students when they were coming up with these measures. I think the VC was just trying to see how can he steer the university through whatever thing they're facing. And this is not only unique to University of Nairobi. I think it's only that University of Nairobi has had a case out in the limelight. There are a lot of universities that are suffering. You've seen a lot of universities that are having conflicts with lecturers who are refusing to mark transcripts because they've not been paid. A lot of universities, even in private sector, a lot of universities are not paying these lecturers, releasing results. Students are being frustrated at the end of it. I mean, we should have a system of respecting contract, that a student has played part of their bargain in paying the school fees, they have played part of their bargain in attending classes and the exams. The university and the administration should equally part of their burden. And so at the end of the day, go for grants as a university, talk to the Ministry of Education, look at how if there are other things, for instance, you get that their electricity bill is so high, look at how you as parastatals can come together and have that conversation, but not burdening the students. That's what I'm saying.
Let me cross over to Rufus. Also, Rufus, is this the best way for the university? Because it looks as if they are tied to the point they cannot even offer to pay NHIF and PE for their employers.
I think it's an issue of catching up with the changing times that you're experiencing right now.
Yes.
So if we take a comparative look with other top universities in the world,
yes,
you realize that they have created extra income streams. An example is research. If you look at a lot of research, business and economic research that is done globally, it's mainly done by top universities. Yes. So if you look at the Kenyan economy and a lot of data that we require in business, data that we need to analyze the various business sectors, the performance of the economy, this is something that universities can readily do. So they can easily look at, let's say, surveys about, let's say, business confidence. They look at the ease of doing business. They can collect all this data and then sell this to the government and also to other institutions and create an extra income stream. So that's one of the ways that other universities are basically surviving the harsh economic times. At the same time, if you look at job market, it has changed. For instance, if you look at the current technologies that we're experiencing now, and this is ranging from 5G technology, you have genomic, sequencing. If you look at autonomous technologies, self-driving cars, robotics, financial technology, innovation, and all these other new sectors that are coming now, these universities are preparing their students to take on these jobs globally. So in terms of competition has gone global. If you're preparing people for the job market, you technically prepare them for the entire global job market. So if our local universities are not preparing the students for the same, then they lack in terms of competitive edge, and outside students tend to be taking advantage in this. So this is creating a higher demand for external universities compared to local universities. And this is becoming quite a big challenge. So I believe it's a challenge that the local universities need to solve, create more updated courses that are covering the current economic needs and also the needs of the near future, about the next 10, 20 years. Prepare people for the changes that are happening, and then this way you're going to create a higher demand, and people are going to be willing to pay a higher fee in order for them to take advantage of this. But if you're going to just be the current courses that we have in Kenya, and take in mind we have a difference. Currently, we have a double spend in education in Kenya, where you have to do an academic course followed by a professional course. And this doesn't really make sense to me. If you have to go and study business administration, business commerce, and then after you are done, you go do a professional course in CPA, you do CSIA, CC, all these courses, I mean, they don't really make sense. You can marry these into one program, where if you join the University of Nairobi to study business, then by the time you're graduating, you should be able to have a professional certificate to practice in the relevant field. If you look at the law courses, if you have to go and study a business in law, degree in law, then after you graduate, you go to the Kenya School of Law. It doesn't make any sense to take all that. They can basically marry the two courses, or simply bring in the professional courses to the academic courses, marry them so that by the time you're graduating, you have some real value that you can apply to the market.
Pretty much. All right, now we take a short break here, but we introduce Wycliffe Alutalala, who's an MCA and party political aspirant in Kisumu Ward. Now, let's talk about the Big Four agenda. It looks as if the government now wants to evaluate what they've done for the past close to 9 years. Have they hacked it? Do they have one financial budget? Are they going to do it? Once we come back here on a Metropole Television, you're most certainly watching Best As I Am.